That's the closing bell on Wall Street, and now it's market domination overtime. We're giving you full team coverage of all the moves to get you up to speed on the action from today's trade. Got David Royal joining us now. David, it's great to see you. Let me start with, I don't think you'll be surprised where I need to start, Dave, with you today. The headline of today, which is Trump saying, listen, he's going to fire Lisa Cook. And Cook pushes right back and says she's not going anywhere. I'm interested what you make of that news. I'm also interested what you make of the market reaction, which was muted.
Pretty muted, yeah. You know, it certainly introduces an element of volatility, uncertainty at a time when the market really doesn't need that, given the volatility we've seen earlier in the year. But it's been much more muted, and it was more muted today. I mean, short-term rates went down about 4.5 bips, I think, on the 2-year, probably anticipating a greater likelihood of a second or third rate cut this year. But longer term, the 10-year was actually down, and the 30-year was up modestly. But yeah, the bond market really didn't react a lot today.
Do you think risk assets are they just, is the stock market looking past this, David, and they're just more focused on, well, hey, you know what, cuts are coming. We're getting the cuts we're looking for. Cheaper money's on the way.
I think that's a big part of it. Risk assets obviously will welcome those cuts. There's also a lot of money sitting on the sidelines. There's about $7 trillion in money market funds in the United States, up from 4 just a few years ago. So there's also a lot of liquidity out there.
We did have guests on the show, David, though, who were bringing up the point about whether this raises new questions about Fed independence. And I'm curious, as a longtime market watcher and observer, how you think about that.
So we have some interesting charts that we look at around Fed independence or central bank independence throughout the world, and you do tend to see a correlation. The more independent the central bank, the lower the long-term inflation rate and the stronger the currency. So I think what you would see if there were concerns about Fed independence is you'd see the yield curve steepen and you'd see longer-term rates tick up.
I want to ask you, I was talking to a different CIO earlier in the show today, and I was asking him, okay, for the stock market, what's the biggest risk looking ahead? Is it valuation or sentiment or positioning? He said the biggest risk he thinks is that, yes, on Friday the markets heard Jay Powell make a policy pivot. He thought the biggest risk is what if the job data, the inflation data between now and then, convinces Powell, hey, you know what, actually changed my mind, no cut. That, he says, is the biggest risk.
I would maybe phrase it a little differently. There's risk to both sides of the Fed's dual mandate. We could see weak employment data, which we saw in the last jobs report. We could also see some hotter inflation data. Powell seemed to imply he was a little more worried about the employment side, and that's why the cut's largely on the table for September 17th. But I think you can get risks from either side that could spook the market.
Let me ask you about another big trend and theme we've been talking about on the show, which is the theme, David, of the U.S. government moving hard into the private sector. Right? So U.S. government taking that stake in Intel. Trump today sounding off on Cracker Barrel. I'm just curious how you're thinking through that theme as a CIO.
It's a little unnerving. The government taking.
How come? Why do you say that, David?
Well, I don't know that I've seen governments take stakes in public companies and have it work out terribly well over the years. But it's something we're keeping a close eye on. It's definitely moving markets. Cracker Barrel stock moved today on that. But it's definitely a new input for investment managers that we're not used to dealing with.
How do you try to manage that?
At the individual name level, we're going to try to, figure out the impact on those individual names. But at a macro level, I think what it's going to do is drive additional volatility, and that's what we saw in the first half of the year.
Let's get back to fundamentals. Let's talk earnings. Nvidia on deck tomorrow after the close. How important is that print to the market?
I think it's very important. I think Nvidia will probably beat on the top and bottom line. That's what we're looking for. But it's going to be a lot of the other aspects. What guidance are they going to give? In particular, are they going to say anything about China? It's unclear whether they will or they won't. More broadly, what's going to happen to data center growth? That's an important indicator of CapEx. CapEx expectations for the big cap tech names have gone up pretty significantly over the past year. So I think that'll be a really important input for the market, as well as margins overall. Big cap tech margins have held up exceptionally well in a tariff environment, whereas as other companies are starting to see some strains. So I think the market's going to be looking at all of those things.
Finally, before I let you go, Dave, we were talking off camera. Just look at the small caps. Say Russell 2000 up 0.7%. You see opportunity with those pint-sized companies?
I do, and they were up 3% Friday. They really led the market Friday, and I think it was the rate sensitivity. These are much more highly leveraged companies than the larger cap companies, and I think there's an environment. Normally, you want to be in small caps. You're coming out of a recession. The economy is really accelerating. I think there's a world in which small caps outperform. We don't go into a recession. We're not expecting one, but you get some rate cuts, and that will really benefit those more highly leveraged companies.
David, always great to see you, especially on set. Thank you, sir.
Thank you.
I want to bring in here our data and markets editor, Jared Blikre, to talk about the market moves at the close. Jared,
Thank you. Let's take a look at the Dow. We pulled out a decent finish here. The Dow ended up the day 135 points or 0.3%. NASDAQ up a little bit more, 44 basis points. That's good for 95 points on the composite. And the S&P 500 stealing the show, also up about 0.4%. That's worth 26 points. And I do like to take a look at the small caps. S&P 600 up about 1/3%. And let's get to some heat maps here. And looks like we're not cooperating on this front. So I'll tell you what, we did have kind of a mixed day inside the Dow. Things were looking a little bit better inside the NASDAQ 100. We saw defense stocks really strong today, along with regional banks. And also ending the day pretty strong is crypto. So it's really been a story of rotation over the last few weeks. And I think today is no exception.
Thank you, Jared. Fed Governor Lisa Cook will file a lawsuit over President Trump's decision to remove her from office. Trump posted a letter to Truth Social Monday night justifying her removal by pointing to allegations Cook made false statements on mortgage agreements. This is the latest escalation in President Trump's feud with the Fed as he pushes the central bank to cut rates. Our senior columnist Rick Newman says Trump's war on the Fed will backfire. And Rick joins me now. Rick.
Hey, Josh. So let's imagine that Trump actually gets his way. It would take a lot more than just firing one member of the interest rate setting committee. But let's say by next year, he does have enough allies on that committee that he actually can compel the Fed to cut rates a lot more than it would otherwise do. So let's say they cut by a point or 2 or 3, which is what Trump has actually said they should do. Markets are going to punish the Fed if they actually do that. And we've seen this in action during the last several months and even during the last year. So last fall, we talked a lot about the Fed cutting short-term interest rates by 1 point. And what happened to long-term interest rates, the ones that really matter to consumers and to businesses? They went the opposite direction. They actually rose by 1 percentage point last year. And that's because the Fed does not directly control long-term interest rates. The market does. And if bond investors and other investors think that the Fed is politicized and it's cutting interest rates just because President Trump wants to do so, they're going to think higher inflation is coming, and that is going to push long-term interest rates higher. So that is the exact opposite of what Trump wants. That's going to slow down the economy. It's going to ding corporate profits. It's going to hurt stock values. It's going to make borrowing costs for the U.S. government more expensive, not less expensive, and just blow up completely in Trump's face. So his whole he's basically involved in a logical fallacy by trying to take over control of the Federal Reserve in the first place. So let's hope it doesn't happen.
Rick, what did you make, though, of, I thought it was interesting, just the market response and reaction today. We had these big headlines dropping, but then you looked at the popular average here, Rick, at the close. I mean, muted response. In fact, major indices finished in the green. What did you make of that response?
Right. So here's what I think is going on, and there's tons of financial commentary on this. I mean, I've just seen an explosion of concern in all the research analysis I'm reading and the people I'm talking to. Lisa Cook is still at the Fed. Trump has not fired her. He has said he wants to fire her. As far as I know, as of now, Josh, he has not actually taken the action to fire her. He's just said that he wants to. And we know from Lisa Cook that if he does actually try to do that, she's going to resist legally, and it looks like she may actually file a lawsuit. So she is still at the Fed. So in terms of how Trump's statement of intent, let's call it that, actually might affect Federal Reserve policymaking, it is not likely to affect Federal Reserve policymaking yet, like not in September when they next meet. And even if this drags out in the courts, I think the people looking into the weeds on this are assuming that it's very possible he could try to fire Lisa Cook, but the courts say, no, we're going to hear this case, but in the meanwhile, she stays in her job. And so the makeup of the Federal Reserve, for all things aside, all other things being equal, stays the same. Now, if that picture changes, for example, if there's an unfavorable court ruling against her or something like that, I don't think that's going to happen imminently, but could happen in the fall. I think then we would see more pronounced reaction in markets. But if you're just trying to figure out what Fed policy is right now, it's really just about the same as it was before this.
Rick, thank you, buddy. Appreciate it.
Hey, Josh.
Coming up, Nvidia earnings on deck. And our next guest has some potential options plays around the AI powerhouse. That's next. And tune in tomorrow for our coverage of Nvidia's report, followed by an interview with CEO Jensen Huang. That's at 6:30 p.m. Eastern Time, right here on Yahoo Finance. The U.S. Justice Department's ongoing criminal probe against UnitedHealth Group is broader than just Medicare. That's according to a Bloomberg report. For more, let's get to senior health reporter Anjali Kamlani. Anj.
That's right, Josh. We just got word from Bloomberg that the probe that we already know has been looking into the Medicare Advantage business is actually a little bit more going beyond that. According to Bloomberg, the probe will also be including the Optum RX, that's the pharmacy benefits manager, as well as how doctors are paid under the Optum brand. Remember that UnitedHealth was basically saying that it is the largest single employer of doctors in the country. And so all of this has led to questions about how it has reached that status and how UnitedHealth has essentially been operating. You've seen the stock down on the news, basically about 1.75% or about 1.5% at the market close, but then it has extended that loss just slightly, paring back just a little bit, but still continuing losses on this news. So we have to kind of keep an eye on it. We know that for years there have been questions about how UnitedHealth has been able to keep the firewalls between its multiple verticals. That includes the insurance side, the doctor's practices, as well as the pharmacy benefits manager. So how all of that comes together is still to be determined. Now, it's important to note that this is not yet a legal filing. The DOJ is simply looking into it and has not yet accused UnitedHealthcare of any wrongdoing. United has responded saying that, it is in compliance and doesn't feel that there is going to be any wrongdoing found. So we'll just have to keep an eye on it as things stand right now.
You sure will. All right, thank you, Anj. Well, Nvidia earnings on deck, and Wall Street expecting it to spark a busy day of trading. Our next guest has some potential options plays around the AI powerhouse. For more, I want to welcome in now Bob Lang, technical analyst at Explosive Options. Bob, great to see you. I want to get to Nvidia, Bob, but first, we're in late August here. We've been seeing some rotation. The major indices don't really seem to want to go anywhere right here. Broadly, Bob, how do you want to play the market here?
Well, I want to be a little cautious here, Josh. Always great to see you, Josh. I want to play it a little bit more cautiously here right now, because after that huge surge on Friday, fueled by Chair Powell's somewhat dovish comments at Jackson Hole, volatility really took a tumble, Josh, on Friday. It fell below 15%. We haven't seen those kind of low numbers for several months now. And generally speaking, when we're around that 14-15% range, it means that the markets are somewhat complacent right here. And you got to be careful here. We do have the end of the month coming up here. There's going to be some window dressing coming up. We do have their Nvidia earnings, as you mentioned, tomorrow night after the close. It's going to be a little bit of excitement as we move into the holiday weekend. Of course, volatility tends to be subdued going into the holiday season. I think where we have to be careful, Josh, is right after the holiday, starting Tuesday, Wednesday of next week is when things are going to get a little bit more bumpy.
All right, let's talk specifics here, Bob. As you mentioned, Nvidia earnings on deck tomorrow after the close. How do I want to play that through options? What's the trade?
Well, I think it is a really good way to trade Nvidia through options. The stock is up 33.5% since the last earnings report hit, and a lot of anticipation and excitement, enthusiasm was coming into that print back in May, and really it was just a thud of a reaction. But interestingly enough, the way big institutions accumulate stock, Josh, is they don't necessarily jump in right after the first print. They sit back, wait a little bit for the price to settle down. And that's kind of what they did in May and early June. And then we saw big institutions starting to come in after the stock real heavily back in June, July, and early August. So where I'd like to see the stock go is to about, I'm thinking that the stock can make a run towards 200 over the next couple of months. And with the stock sitting about $181, Josh, I'd like to see maybe buying like the October call, the 180 call, a little bit expensive right now. It's about $11. I would like to maybe sell the 195 call against that for the same, basically the same amount of contracts, get about $3 of credit of that, and I can cut my risk by about 27% by buying that calendar diagonal spread.
Outside of Nvidia, Bob, I know you're also eyeing Alphabet. Walk us through what you're seeing there.
Yeah, so Alphabet just hit a new all-time high just a couple of days ago, which is really impressive. It's actually been the best performer out of all the Mag 7 stocks for the past month and a half. It really had been a laggard for most of the summer, and then the earnings came out in July, and they were real strong. And a lot of people really hesitated to jump into Google, Alphabet, but not the big institutions. We saw a lot of big institutional money coming in to that stock over the last 3.5, 4 weeks, and we did see some large option trades as well too, as it was running up to the all-time high. So I would like to take a look at Alphabet here with a trade like maybe the October 205 call, which is selling at about $10.50. I would do the same thing, Josh, as I did with the Nvidia, selling the September 220 calls. Now that's about 15-17% away from the current strike. I think that's pretty safe bet there because September there is no real earnings risk or any other risk as well too. We can get a nice little premium by selling that particular call, Josh, and maybe saving at about 20% and having a nice play going into October. The stock usually does well leading into earnings.
Finally, Bob, before we let you go, we got Nvidia reporting. You also do have Alibaba reporting. They're scheduled to report August 29th. Ahead of that print, Bob, what's the options play?
Boy, that one really has me curious, Josh. Friday morning, they will print their earnings 2 days after Nvidia. The stock has been rather strong of late, but the stock really just doesn't move unless the Hong Kong market moves. And I've seen a lot of good, strong correlations there. When Hong Kong market is up one real strong like it was last week, you saw Alibaba move really nicely to the upside. But I would be careful on this one. The stock had good earnings last time around. It ran up and it pulled right back again. I think people were a little bit more hesitant. I think this time around, though, it's got some staying power here. And I think if the stock moves up nicely up to above 130, it's got some ground to go. So I would be looking at, Josh, saying maybe making a 125 October call play right now. It's selling for about, I think about $10.50, $11 right now. And if it gets above that 130 level, I think that's got some room up to about 145, maybe 155 by the end of October. So what, we can manage that trade if we get to past that 130 level. But I do like that stock going forward.
Bob, appreciate your time in those trades as always. Thank you.
Great to be with you, Josh.
And tune in tomorrow for our coverage of Nvidia's report, followed by an interview with CEO Jensen Huang. That's at 6:30 p.m. Eastern Time right here on Yahoo Finance. Time now for what to watch Wednesday, August 27th. Starting off on the earnings front, we're getting another batch of earnings, but all eyes will be on AI juggernaut Nvidia. Nvidia announcing second quarter results after the markets close on Wednesday. Analysts expecting Nvidia to top analyst estimates for Q2, driven by strong demand for its AI chips, including the new Blackwell chip. Hyperscalers and government AI projects continuing to show strong demand. Investors will also be listening closely for any commentary on the call about Nvidia's ability to sell chips in China. According to reports, the company is ordering a halt to H20 chip production in China. That's after a directive from the Chinese government against purchases of the chip. Yahoo Finance will have special coverage of all things Nvidia starting at 4:15 p.m. Eastern on Wednesday. And we're also bringing you a live interview with Nvidia CEO Jensen Huang after the earnings call. Be sure to tune in for that at 6:30 p.m. Eastern. That's going to do it for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all of your coverage leading up to and after the closing bell. Don't go anywhere. On the other side of the break, it's asking for a trend. I've got you covered for the next half hour with the latest and greatest market-moving stories so you can get ahead of the themes affecting your money. Stay tuned.